this video, I'm going to be giving you the most mechanical, no-nonsense way of mapping your structure, because I've seen loads of mapping structure videos and they do not tell you why a high is a high, why a low is a low, why a break is a break. They can't tell you it, but I'm going to do it in this video. Watch it. Ow. Look at this zigzag line. What does it represent? Well, it represents price on a chart. And in that price, you can see we have lows and highs and lows and highs all over the place. So what we're going to do in this video is to establish what swing structure is. So if we can establish significant swing points, that is a good start. So if we take the first low, which would be the start right here, and the first high that's formed, okay, right here, we can say that that is a swing low and high. Why? Because it's all we've got. If we rewound price to this point, it would be this low and this high, okay? And then we form another low and break that high, okay? So we have our first break of structure here. This swing low is formed after this previous swing high is broken. Now we have a new swing high when price starts to pull back. You can see here we develop a high, a low, a high, a low. Are these all swing highs and lows? No, because swing highs and lows are only created after a break of structure. So you can see this was the previous swing high, this was the previous swing low, which gets broken first. Well, you can see it's the swing high right here, okay? So we have our high, we then have low, high, low. What is the lowest point before this high gets broken? Well, this would be the lowest point. So this is a swing low, not this. Nothing was broken here. This is a type of structure, but not something we're going to be getting into in this video, okay? Then what happens? We have a break of structure again, right here. Okay, so now price comes down, comes up, comes down. Okay, we have our swing low and our swing high, which gets broken first. Well, I can see the swing low doesn't get broken till over here. The swing high gets broken earlier here. Now we have all this between the swing low and high. That break there. So yeah, you can see we have low, high, low, high, low, high, low, high, low, high. But our swing structure remains this high, this low, which is the lowest point, and then this high, which came after the break of structure. This is all secondary structure. It's either internal or substructure, not swing structure, okay? So next up, price moves down, comes up, comes down. We then have another break, okay? If this was the swing low, this was the swing high, the swing high is broken before the swing low. Here you can see this is a bullish trend. Next up, what happens next? We have our swing low and our swing high. We get a break of the swing low. We switch to bearish swing structure, okay? Then price comes down, comes up, creates a high, creates a low, creates a high, breaks the swing low. Okay, so this is our highest point before that swing low break. So if we go back and label our swing points here, what we would see is we had swing high, swing low, 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 swing high, and then potentially swing low as soon as it starts to pull back. Okay, so that's our swing structure. It's if we marked it on as a line, it would be like this. This is our swing structure movement. Everything in between that is, you know, we can just consider it for the moment noise. This is the actual movement of price that's going on. Okay, So I hope that's cleared up swing structure. So now hopefully we've cleared up in theory what swing structure is and what we're looking for. Now the problem a lot of people have is when it comes to the actual charts with candles on it, they don't know how to define highs and lows in any way. And there are multiple theories on this. Some people just use their sight, so they're just looking at this and they'll say, right, okay, well I can see that's an obvious high, low, high, low, high, low, la 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 la. And you know, that can work to an extent if you're just visual. But for me, that's not mechanical enough, that's not rule based, and you know, it can come into trouble if questioning the small little details, and I want to have a solid answer for that. So another thing people use is pip count. So if price has moved up in a bullish trend, and then it stops and it pulls back with some bearish candles, they would measure the size of the pullback. Say this is the bullish move and the pullback starts from here and comes down to here. They'd measure that. How many pips is it? If it's above a certain number of pips, that counts as a valid pullback. If it's below, it doesn't. Now I can see the logic in this. The problem with it comes when you have to have a certain number for each time frame that you trade on. Fine if you only trade on one time frame, but if you're trading on multiple time frames, you have to keep that in mind. Also, another problem is that if you're trading multiple pairs, there's going to be variations in how many pips counts as a pullback. So, you know, that's going to change again. If you just trade one pair on one time frame, then maybe it's more valid. But even then, you will find that the volatility of price fluctuates quite a lot from day to day, or even hour to hour, minute to minute. And so what the London session might count as a valid pullback, in the New York session might not, because the volatility is different, and if there's big news and all that kind of thing. So again, not really how I would do it. I will now get into the one rule that I have, and I've done videos on this before. It's the very first video in my channel, but this is like the updated version to make it as clear as possible. And my one rule is that if we have a bullish move up or a bearish move down, price then stops, and then what I call a cemented candle occurs. And that's when we have a candle that engulfs the low of the candle immediately to its left. So if we look closely at these candles, here we have a low. Okay, this is the very first candle. We then have this candle. Yes, it's a bearish candle, but it doesn't close below the wick of the previous candle. Okay, so this is just a continued move up. Next candle doesn't close below anything. It's another bullish candle. Clearly another bullish candle, another bullish candle, and then we start having these bearish candles. So we have this bearish candle, but it doesn't close below the low of the candle to its left. So this is not yet a valid pullback. This one also, this is the candle to its left, doesn't close below it. Okay, fine. Then we have a bullish candle. Okay, obviously bullish candle would not close below a bearish candle. And then we have this candle here. Now this candle does close below the candle immediately to its left. So now what we can see is that we have created the highest point before this candle, which was this high, becomes a swing high in this move. So we have, okay, let's mark that on. If we take this, we can now mark that on as our swing high. Now we look and see, okay, when is this swing high broken? Well, it's broken by this candle. This candle closes above this candle. That's how I define a break of structure. Price has to close above the swing high. So once that happens, that confirms the lowest point before this break, between this high and the break. What's the lowest point after the cemented candle? It would be this one right here. Okay, so this is our low. So it's the lowest point after the cemented candle occurs. So it's not this low here because we hadn't had this candle yet. It's this one right here. Okay, so then we have our valid break of structure. Okay, so we'll mark this as our swing low because it's the very lowest point on the chart. We can't go back any further. Then we have a high, then we have a low. and now we have another high. This high is confirmed because we get a candle that closes below the candle to its left. So we have a swing high created, and then we see what gets broken, because currently our range now is between this candle and this low and this high. Okay, so then price pulls back, and what gets broken next? Well, the high does. So we know we are continuing bullishly. So now we are mapping structure mechanically using the candles in a very, very simple way, and showing us where our lows and highs are actually occurring. So we can keep moving up and seeing that after this break of structure, none of these candles closed below the candle to their left. We didn't get any cemented highs. Okay, so price just keeps moving up, keeps moving up, keeps moving up until this point here, where we get that candle that closes below the candle to its left. So our next swing high is confirmed as this one. This is the highest point before price cemented. Okay, so now our current range is between this swing low, because this was the lowest point before price broke up again, and this swing high. And what happens next? The price changed to bearish because we didn't get a break of this high. This break of this low came next. So now we wait for a confirmed swing low. And when is the swing low confirmed? It's when we get a cemented low. So this candle closed above the candle to its left. This candle did not. This candle did. So now we have our confirmed swing low. Okay, so we have low, high, low, high, low, high, and we get a bearish break, low, and then, okay, what happened next? Well, we're still in this swing range from this high to this low. And again, this is where people get confused. We are creating structure, we're cementing highs and lows within this swing range, but none of this matters until we get a break of either the low or the high. Okay, and you can see we get that break right here. Okay, so now what is the highest point before this break? It's this right here. So we can show we have our swing high confirmed. Then after the break of the low, we're waiting for that cemented low. So here we can see this candle broke structure. Did the next candle close above this candle? No. Did the next candle close above this candle? Yes, we have that closure. Body close above this candle's highest point. Okay, so now we have our confirmed swing low. Okay, and so price goes on this way. You can very quickly see now our current range would be between this high and this low. And what comes next? A break of the high or a break of the low? Well, it's a break of the low, so there we go. So now after a break, we confirm the swing high, and then we wait for a cemented candle to confirm the swing low. So again, this looks very messy, but we have a very mechanical way of looking at price. So this is the lowest point. Does this candle close above the candle to its left? No. Does this candle? No. Does this one? No. Does this one? No, no, no. And we can see it's not until this point here that price closes above the candle to its left. This didn't, or maybe it did if we look at the ticks, but okay, this did. So sometimes this is the monthly, so you have to zoom in and really see whether that did. So here we can see that this candle did close above the candle to its left, so that is in fact our cemented low. Either way, it doesn't make a difference because the lowest point before that cementation was this one. Okay, so that confirms our swing low is here. And where's our swing high? So now what we're doing is we are waiting to see, because we've confirmed the low now and we've confirmed the high. So this is our range. That's all we need to look at. Okay. This was the lowest point before that cemented low. Okay, so that's our swing low. Now, I use body breaks to determine breaks of structure. So you can see that we just had a wick break of this low here. Okay, so this doesn't count as a break for me, so I just put my line straight through that, but I can still see that before we got a break of the high, we still did get a break of the low. So, in terms of structure, we are still bearish in the trend. And what is the highest point before that break of structure? Well, it is this point here. So before the break of structure and after the cemented low. Okay, we can finally put that as our swing high. And we can see after this break, we got another cemented low here. So we can confirm that as our current swing low. And now we've just marked out the entire monthly swing structure on Euro USD. Okay, now, so if we do the same thing we did before, we can mark out the actual movement of price on this time frame. So here we go, we have our swing lows and swing highs, and that can actually hide the candles. And you can see clearly, basically a line chart of how price is moving in regards to swing structure. So as you can see, this is a very mechanical way of mapping your swing structure, and it works on any time frame, on any pair, indices, stocks, crypto, whatever you want to use it on. It's 100% rule-based, 100% mechanical, and you just can't go wrong or get lost with it. Now, there is a trickier thing to do. Like here, it was very easy to find a starting point because it's the monthly and there's not a lot of data, not many candles, so we could just start from the very beginning. But what if you're starting on a lower time frame? Where do you start amongst all the mess? So what I do, I'll go top-down analysis, marking through charts. And so as you can see on the monthly, we now have our last swing range, which is from here to here. And so I'll mark that swing range and make sure that that is visible on the next time frame down that I'm going to use. So if I were to go down to the weekly, I would start work between this high and this low, okay? So that we know the swing structure in that range. So starting from, I guess we can see the obvious point of high, low, high before the top of this range. So I would begin my marking there. So we can mark a high there, because why? This candle was cemented by this one. And then so we have our swing high here, and I can see that that gets broken at this point. So we now have a confirmed swing low, which is the lowest point after this high. And then we have our confirmed swing high, and this is another interesting one. You can see that the high is confirmed, or sorry, this is the highest point, because this candle closed below the candle to its left. So the highest point before that was this. So that is our swing high. Now what you can see is after that we had a wick above that, but as we said before, that's not a break of structure. This doesn't change anything in our structure. You can see the next break was a break of this swing low over at this point here. So we can mark that on. And then we'll just go on the same exact way as I marked out the monthly. So I'll just do that now, but I'll speed it up in the video, okay? So this is a point to look out for. You can see here that we closed below this low, and then we failed to cement. None of these candles closed above the one to their left. So this becomes just one continuous move down until you get that cemented candle after a low. So you can see here, again, this one didn't, this one didn't, this one didn't, this one didn't, but this one closed above the candle to its left, and that is still, this is the lowest point before that happened. So this is our swing low. So again, where's the swing high in this case? Well, this is the highest point after the candle, the low cemented, and then we had the break to the downside. Then what happened next? We cemented the low here, we got a break of the high, the swing structure high. And then we got a break of the low again. Now, in this video, obviously, I'm not going into the details. There are more nuances to structure that we go into at Magic FX Academy. This is more just the very basics of swing structure. What we have major structure, minor structure, substructure, minor one structure, internal structure, and all this kind of stuff that we can read into that, and so we can really go into depth with what's going on with price. And then of course you have the premium and discount, order flow, supply and demand zones, and all that stuff to keep you busy with. But continuing with just swing structure, I will now continue that on. You can always recognize the COVID month in charts. Every chart will have this big bearish candle. Okay, so there we have it. We have our swing structure on the weekly now marked out. Probably did a bit too much, but we have from the most recent monthly swing range mapped out. And then what you can do going forward from there, if depending on what you use, you can mark the most recent weekly swing structure, and then mark the daily from there, and then mark the most recent daily, and mark the 4 hour from there, mark the most recent 4 hour, mark the whatever you use next, 15-minute from there. So you're always within the most recent range from the higher time frames all the way down. And then once you get to the 1 minute, you're marking the 1 minute within the 15-minute, and you're up to date with your swing structure. So this was basic swing structure, and I hope this has cleared up a few things. Obviously it was the very first video I put on this channel, and a slightly different style there, and I went on for ages. Well, I've gone on for quite a while in this video, but hopefully that has made it clearer, because I get a lot of questions still. So obviously I didn't make things quite clear enough in the first video. Also, in that first video, the audio was only coming out on the left channel for some reason. So hopefully that is now fixed with this one, and this will become the new ultimate structure video. Now, I have another video called Structure Mapping Part 2, which goes into major and minor structure and uses the premium and discount theory. And I would definitely recommend, if you haven't seen it yet, go and watch that now. I'll try and put a link to that somewhere here, or in the description if I forget. Now, yeah, so this is your basics. This is what you need to go forward with price. You need that mechanical structure just to be able to read price and not be lost in the market. It's so important, and it's the biggest hurdle for me in my trading that it took to get over and actually find that I wasn't coming to the charts not knowing what I was looking for or where price was going. Like now I know 100% what the trend is, and where I'm looking to take shorts or longs from. Okay, so hope that helped.